Ladies and gentlemen, imagine waking up, grabbing your phone and seeing red. Not the sunrise, not a notification from a loved one, but the market's bleeding red. Bitcoin's plunging, your portfolio's in free fall, and panic spreads faster than wildfire. But here's the thing. This isn't just about numbers on a screen. It's about what these numbers represent: trust, hope, fear, and the ever-persistent question, what? You're not alone. As Bitcoin nosedives, headlines scream trade war, and the alt-season's obituary is being written in real time, ADA, HBAR, and countless other altcoins seem like distant memories of better days. But let's pause. Let's not just react, let's reflect. Because amidst the chaos, there's opportunity. Amidst the fear, there's a lesson. This isn't just about market crashes or political power plays. This is about understanding the deeper currents beneath the surface, the stories that don't make the headlines, the patterns that repeat through history, and the mindset that separates those who crumble from those who rise. So before you close this video thinking it's just another doom and gloom session, I challenge you to stay. Not because I'll sugarcoat reality, but because within this storm lies the blueprint for navigating not just this crash, but every challenge life throws your way. This is more than crypto news. This is a masterclass in resilience. Now let's peel back the layers of this chaos. The Bitcoin crash. A plunge so severe it's left seasoned traders and newcomers alike questioning everything. But why did it happen? Was it just market overreaction? Or is there a deeper, more sinister force at play? First, let's talk about the Trump tariffs that triggered a trade war. Canada, Mexico, China, all striking back, sending shockwaves not just through traditional markets, but deeply into the crypto world. This isn't just politics. It's a direct hit to investor confidence. When global economies wobble, people pull back. And when they pull back, the markets bleed. But here's the twist. Crypto was supposed to be the safe haven, the digital gold immune to these geopolitical tremors. So why are we seeing the opposite? The answer lies in the interconnectedness of today's world. No market exists in a vacuum. Bitcoin's crash isn't just a financial event, it's a reflection of a global narrative unraveling. Then there's the alt season, or rather, the lack of it. Billions wiped off crypto prices, leaving enthusiasts disillusioned. ADA and HBAR, once shining stars, now flicker dimly in the shadows of their former glory. But what if I told you this isn't the end? What if I said this is just the market's way of shaking out the weak hands, the unprepared, and the short-sighted? Because while the headlines focus on the crash, the real story is in the recovery. The subtle signs that the whales aren't moving their coins. The quiet accumulation happening behind the scenes. The markets may be down, but the game isn't over. And that's why you need to stay tuned, because understanding these dynamics isn't just about surviving this crash, it's about positioning yourself to thrive in the aftermath. It's about recognizing that in every downturn, there's an upswing waiting to be seized. Bitcoin's crash, the perfect storm. Bitcoin's crash didn't happen in a vacuum. It was a culmination of multiple factors converging to create what can only be described as the perfect storm. Imagine standing at the edge of a cliff, feeling the wind whip against your face, and suddenly the ground beneath you gives way. That's what happened to Bitcoin. First, let's talk about the macroeconomic landscape. Inflation fears were already looming large, with central banks tightening monetary policies across the globe. Interest rates were rising, and liquidity, the lifeblood of risk assets like Bitcoin, was drying up. Investors, already on edge, began to pull back, seeking safer harbors in traditional assets. Then came the regulatory clampdowns. Governments worldwide were stepping up their scrutiny of cryptocurrencies. From China's outright bans to the U.S. Securities and Exchange Commission's SEC's relentless pursuit of regulatory frameworks, the crypto space felt under siege. Every new announcement, every new regulation added fuel to the fire of uncertainty. But perhaps the most insidious factor was market psychology. Fear is a powerful force, and in the world of crypto, it spreads like wildfire. As Bitcoin's price began to dip, panic set in. Retail investors, many of whom had entered the market during the bull runs, started to sell off en masse. This triggered a cascade of liquidations, further driving the price down. However, history has shown us that Bitcoin is resilient. This isn't the first crash, and it won't be the last. Each time Bitcoin has plummeted, it has risen stronger, breaking new all-time highs. The key is to understand that crashes are not just setbacks. They are opportunities for reflection, learning, and strategic positioning. The current crash, while painful, is a part of Bitcoin's growth story. It's a reminder that the road to financial freedom is not a straight path, but a winding journey filled with challenges. For those who can weather the storm, the rewards on the other side can be life-changing. Trade war fallout, how politics invaded crypto. When we think of cryptocurrencies, we often imagine a world free from government interference, a decentralized utopia where individuals have full control over their assets. But the recent trade wars have shattered this illusion, proving that even the most independent markets are not immune to political machinations. The tariffs imposed by the Trump administration set off a chain reaction that reverberated through global markets. Canada and Mexico, two of the United States' closest trading partners, retaliated with their own tariffs. China, a major player in the global economy, made strategic moves that sent shockwaves across financial markets. These political decisions didn't just affect traditional markets. They struck at the heart of the crypto world. Investor confidence, already fragile, took a significant hit. As traditional markets tumbled, the ripple effect reached cryptocurrencies, causing widespread sell-off. But why did this happen? Isn't crypto supposed to be a hedge against such geopolitical risks? The answer lies in the evolving nature of the crypto market. As institutional investors have entered the space, cryptocurrencies have become more intertwined with traditional financial systems. What affects the stock market now affects the crypto market as well. Moreover, the narrative around crypto as a safe haven is still developing. While Bitcoin is often referred to as digital gold, it hasn't yet achieved the same level of stability and trust as traditional safe haven assets. The recent trade wars highlighted this vulnerability, showing that in times of global uncertainty, even crypto isn't entirely safe. However, this isn't necessarily a bad thing. The fact that crypto is affected by global politics means it's becoming a significant player on the world stage. It's a sign of growth and maturation, and as the market continues to evolve, it will become more resilient to such shocks. Alt season, dead or dormant? For months, crypto enthusiasts have been eagerly awaiting the next alt season, a period where altcoins outperform Bitcoin, bringing massive gains to investors. But as the markets continue to tumble, many are left wondering, is alt season dead? The recent downturn has certainly been brutal. Billions have been wiped off the market cap of altcoins, and projects that were once darlings of the crypto community are now struggling to stay afloat. ADA, HBAR, and countless other altcoins have seen their values plummet, leaving investors disillusioned. But here's the thing, alt season isn't dead. It's dormant. Market cycles are a natural part of the crypto ecosystem. After every bull run, there's a period of correction and consolidation. This is when the weak projects are weeded out and only the strongest survive. If we look at historical data, we can see that alt seasons have always followed Bitcoin bull runs. As Bitcoin stabilizes and investor confidence returns, money starts to flow into altcoins. This pattern has repeated itself time and again, and there's no reason to believe it won't happen again. The key is to be patient and strategic. Identify projects with strong fundamentals, active development teams, and real-world use cases. These are the altcoins that will thrive when the next alt season arrives. It's not a question of if, but when. ADA and HBAR, from hype to hope. Cardano, ADA, and Hedera have been at the forefront of the altcoin revolution. Both projects promise to bring innovation and scalability to the blockchain space, and for a time they delivered. But the recent market downturn has tested their resilience. ADA, with its emphasis on academic rigor and peer-reviewed research, has always been a long-term play. The project's founder, Charles Hoskinson, has consistently stressed the importance of building a solid foundation before chasing short-term gains. While the market may have lost confidence in the short term, ADA's fundamentals remain strong. HBAR, on the other hand, has focused on enterprise adoption and real-world use cases. The Hedera Hashgraph technology offers faster transaction speeds and greater scalability than traditional blockchains, making it an attractive option for businesses. Despite the market downturn, HBAR continues to form partnerships with major companies, signaling a bright future ahead. Both ADA and HBAR represent the next evolution of blockchain technology. While their prices may be down, their potential remains immense. For investors willing to look beyond the current market conditions, these projects offer a beacon of hope in an otherwise gloomy landscape. Navigating the chaos, strategies for survival and success. In times of market turmoil, it's easy to get swept up in the panic, but those who can stay calm and strategic are the ones who come out on top. Here are some key strategies to navigate the current chaos and position yourself for future success. First, focus on diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, including Bitcoin, altcoins, and even traditional assets. This will help mitigate risk and protect your portfolio from extreme volatility. Second, adopt a long-term mindset. The crypto market is notorious for its volatility, but over the long term, it has consistently delivered impressive returns. Don't let short-term fluctuations shake your confidence. Stay focused on your long-term goals and trust the process. Third, stay informed. Knowledge is power in the world of crypto. Follow reputable sources, stay updated on market trends, and continuously educate yourself. The more you know, the better equipped you'll be to make informed decisions. Finally, don't be afraid to seek help. Whether it's joining a community of like-minded investors or consulting with a financial advisor, surrounding yourself with knowledgeable people can provide valuable insights and support. So, what have we learned from this storm? That markets are volatile, yes. That politics can shake even the most resilient systems, absolutely. But more importantly, we've learned that within every crash, there's a lesson. And within every lesson, there's an opportunity. Bitcoin's crash, the trade wars, the halted alt season, they're not the end of the story. They're just chapters in a much larger narrative. And if you've stayed with me this far, you're not just a spectator in this story. You're an active participant. Your decisions, your mindset, your resilience, they determine how your story unfolds. So the next time you wake up to a sea of red, remember this. It's not about the crash. It's about how you rise. It's about seeing beyond the fear, recognizing the patterns, and seizing the opportunities others are too scared to touch. Stay informed, stay resilient, and above all, stay ready, because the future belongs to those who prepare for it today.